I'm okay with political. I think Avalanche is going to be there first, and it's just going to lead to Ethereum continuing to bleed off TVL to other chains.
The contents of this show is for informational purposes only. Nothing here is financial advice. Hi, I'm JF. I'm the head of growth at Moremoney Finance, an ex-founder and CFA Charterholder. My co-host Jared is a crypto and equity trader, an ex-founder and an ex-crypto fund manager. Our goal with this podcast is to imagine the future of crypto. And to help us do that today, we have FireStorm, who has spent over 10 years on Wall Street in equities, FX, algorithmic executions, and has been working on crypto projects for many years. He's currently an advisor at Dexalot, and today we're going to talk about the central limit order books, AMMs, and other fun topics. So welcome, FireStorm.
Welcome.
Thank you very much, guys. Thanks for having me. Happy to be here. Looking forward to this awesome conversation.
Yeah, so we thought we would start with the basics of a CLOB and maybe frame it in terms of why this was not possible on other chains before, until Avalanche.
Yeah, of course. I mean, if it's okay, I could even take one step backwards more than that. Like, central limit order books are actually the mechanisms through which all of TradFi trades, right? No matter what the asset is, unless it's something completely illiquid and non-electronic, everything trades on one form of a central limit order book exchange. Just to sort of simplify it for the audience, a central limit order book exchange just means a single place where bids and offers, i.e. intentions to buy and intentions to sell, are actually collected and displayed to the overall participants of the marketplace, right? The reason why this is very efficient is because people just place their interests, they show it, they advertise it to the entire market, and you actually can see interests beyond the tightest price. Like, obviously the closest, the lowest bid and the highest offer are the highest bid and the lowest offers are like the inside market. Like, those are the more marketable orders out there. But then you can see if there is large sellers or large buyers further away from the market. So, it is so far has been the most capital efficient mechanism of trading because individuals don't need to put up additional capital beyond what they're trying to trade, right? So that's what central limit order books are. Now, when you think about applying this mechanism on a blockchain, there are a number of challenges. So first of all, central limit order book exchanges in TradFi are all closed loop systems, okay? What that means is, these are entities like NASDAQ or New York Stock Exchange, if you're, familiar with stocks. They are entities that operate servers and software in a completely closed system. Nobody really knows what that software looks like. Nobody has access to those servers, and they provide the service, to the communities, to the traders. But again, it's them, and they technically could turn it off if they choose to do so, right? And because blockchains don't operate this way, there has been a big sort of gap since the, advent of Ethereum on how central limit order books can move to a blockchain. Ethereum, obviously providing the ability to write smart contracts, allowed people to write smart contracts in the form of a matching engine. All of these TradFi central limit order book exchanges, I'm going to call them CLOBs going forward to save us some time. It's a lot of words. All of these CLOBs, operate a matching engine, which effectively is just a piece of software that matches, buyers and sellers who are trying to do the swap at the same price, right? Technically, smart contracts are software that just run on blockchains, or rather, on the chain itself, and you could write the same thing and deploy it onto the blockchain. So Ethereum was the first blockchain that allowed this to happen. But of course, Ethereum blockchain
Can I just
itself,
ask a quick question?
Sure, of course.
I'm just wondering if it would have been possible if any other cryptos, for example, just cryptocurrencies, could have used a sort of offline system, but to sort of decentralize it in another way. So basically to kind of make autonomous wallets so that they could trade through, similar to a DEX, but not on a blockchain. Or if this would be kind of like antithetical to the idea of decentralization. When you think of like the Lightning Network, for example, I think a lot of that development is kind of happening in that direction, right? Like you have kind of this decentralized system, but then it's coming together in these technically decentralized locations to make, trading.
Yeah, I mean, I think you can. The short answer is yes, you can, but it's a trade-off, right?
Yeah.
You would only want to do this if your layer one, your consensus is not fast enough, you don't have enough capacity, you don't have quick finality. The reason why people take stuff off-chain up until now has been because Ethereum, in its current form, of course they have plans for the future, but in its current form, couldn't support the speeds, and the finality that TradFi users have been used to. Just to put it into context, right? Yeah, in TradFi, let's talk about FX markets, right? I'm, most familiar with FX markets. Trades happen anywhere from, 5 milliseconds to, let's say, 60 milliseconds. There is types of liquidity that allow market makers to sort of take a second look. It's called last look, at trades. But generally, the sort of ceiling of trades occurring in the market on average is going to be around 60 milliseconds. And that number actually is going down on a daily basis, right? Like the big institutions are trying to improve the standard and make it as fast as possible over time. Now, of course, when you bring this to the blockchain world, Ethereum finalizing a transaction, in the order of minutes, sometimes up to 10 minutes, is eons versus TradFi, right? Because think of it this way. You buy something and you're waiting for 10 minutes to know exactly what price you bought it at, right? Or rather, you may be doing a trade at price X, but by the time you actually take your asset into your wallet or you take your own custody, the price may have moved by a lot. And as we know, crypto markets tend to move a lot as well. So, this didn't work. This CLOBs didn't work that well on Ethereum primarily because of this. Now, when you sort of translate what I just said to the user experience side, as a user, if I try to connect to an exchange on Ethereum, sending an order first is going to cost me a bunch of gas, which is now quite expensive on Ethereum. Once I send my order, it's going to take 10 minutes. Let's say I'm paying the minimum possible gas. It's going to take 5 to 10 minutes to arrive and be advertised to the marketplace. Then
or it
somebody
gets
else
stuck.
is going to, or it gets stuck because the fees just spiked because there
And
was
then
a
you
hot
just
NFT
lose those
drop,
fees.
Of course. Yeah, you may lose those fees. And then somebody that's wanting to trade against my order is going to pay the fee. And again, it's a very cumbersome process, right? We live in 2022, especially the newer generation wants instant gratification. I want to click and I want to be done with it, right? And that's why, Ethereum didn't work. And I can tell you, I was part of a very, in my opinion, it was a very good, decentralized CLOB project on Ethereum. It was decently funded. We actually had the opportunity to go out and do things that other exchanges couldn't do. But again, the user experience side never clicked, mainly because of the way Ethereum chain today works. So, this sort of was the reason why Dexalot ultimately was built on Avalanche.
And how did the team find Avalanche? And would this be possible today on other chains?
Yeah, I mean, any chain that supports smart contracts as a generic term technically should allow a CLOB implementation, right? As long as you can write programmatic rules of matching buys and sells, a CLOB should be possible. Now, of course, though, let's talk about why Avalanche, I guess, and then I'll go into why the team or how the team found Avalanche. So Avalanche gives you transaction finality at 1 second or less. You have a block every 2 seconds, right, roughly. And depending on, when your transaction is executing, you may finalize as quickly as 300 milliseconds. We do see transactions that happen in 300 milliseconds. We do see transactions that happen at 600 milliseconds, right? So from a user experience perspective, that is almost comparable to TradFi, or it's almost comparable to Binance, which is a TradFi style crypto exchange, right? So besides Avalanche, there are other Gen 3 blockchains, as I'd like to call them, who have different varying, finality numbers. Solana, for example, has Theorem. We know Cosmos has this potential capability, Polkadot, Near. There's a bunch of other, options coming out. But, from the Dexalot team's perspective and putting, personal connections aside, Avalanche was the one that actually was here now and was proven, right? Because if you think about it, the way the Avalanche team, Günserer, Kevin, and the rest of the guys, the way they approach their business strategy has been amazing, right? Let's innovate on the biggest bottleneck or the biggest problem that we've observed in Ethereum, consensus, and let's take the amazing things from Bitcoin, the UTXO system, and then let's take the amazing things from Ethereum, EVM, right? Combine them, innovate on the lower level infrastructure piece, which is the consensus, and let's see how people like it. And it was amazing because now you basically have Ethereum that is operating faster, higher capacity, more transactions, and lower fees. And yes, people nowadays complain a lot about fees increasing. Of course, as you use certain, as there's more usage on blockchains, the fees are dynamic, they adjust, but it's still nowhere near what Ethereum costs for me to use stuff today. And then they're sort of working on subnets now, which we can touch on later. But, that's how the team ended up with Avalanche, a blockchain with a innovative consensus that actually works. It's EVM compatible. It supports Solidity, which is a well-tested language to write smart contracts in. And that's how they sort of ended up starting to build the project, the two founders, Nihat and Cengiz.
Okay, and when you mention you see Avalanche as a Gen 3 platform, Gen 1 being something like Bitcoin, and then Gen 2 being a smart contract platform like Ethereum that works, but it doesn't have good time to finality.
Correct. That's exactly what I like. Bitcoin was the first sort of foray of, I guess, humanity into the concepts of decentralization, decentralized money, right? Money is a belief system. And then, people always think about money, or up until now, they always thought about money as backed by governments, backed by military, backed by economies. And Bitcoin sort of was extremely novel in the concept of, being decentralized and not being backed by anything other than the fact that it's decentralized, right? It also was innovative in the concept of peer-to-peer direct monetary transactions. And that's why I call it Gen 1. They sort of this Satoshi Nakamoto solved this decentralization, or brought this decentralization innovation for people to wrap their heads around and, start removing the middlemen. But of course, it's just money, right? Sending, there's a million different arguments. The one that ultimately stuck, I know, is like the corporate asset, store of value, yada, yada. I don't buy into that as much. I kind of view Bitcoin as the first innovation that allowed us to invent Ethereum, that allowed us to invent Gen 3 type blockchains, which are coming closer to solving the real world's transactional needs in a more decentralized manner. Gen 2 is Ethereum, as you said, and then Gen 3 is Avalanche and all its competitors. And Avalanche is trying to move into the Ethereum is moving into the Gen 3 area as well.
Yeah, I think Jared and I would probably agree with that. Yeah, go ahead, Jared.
Yeah, I was just, I was thinking, I kind of personally have the opinion that Bitcoin is more close to like a commodity, where it's like the proof of work system is kind of like you're creating value from, your time, your electricity, the money you spend into it, the machines, like all these different things are accumulating up to a semi-store of value that, is obviously going to have a very wide range of volatility where it's traded at.
I mean, I buy all those arguments, but I mean, like, just to respond to the first thing you said, like, energy, right? The strongest argument that I've heard recently is, it's stuck energy, stuck somewhere in the mountains, being translated into value and transmitted across. Bro, why don't we transmit it as real energy to the communities that don't have electricity, right? Rather than converting it to money, because you can create money now. Look at Avalanche, which is almost zero emissions, zero whatever. Let's use energy for actual electricity or heating or whatever else we need rather than Bitcoin. I get it. Renewable energy creates this, yada yada. Like, you don't need to spend this much energy to create money anymore. Like, this is now solved problem, in my opinion. I'm sure I'll get slaughtered, but
So I would say that the second thing that I see happening, for example, with Ethereum moving towards the proof of stake model, now you have Avalanche being, basically proof of stake model. I see them having value in the sense of their kind of proof of value rather than proof of stake. It's just they are valued as much as you are able to put something valuable on top of it and it's able to run efficiently. And that's what people are going to value about this, because you have all these different applications that are going to bring an increased level of value to everyone using it.
Yeah, absolutely. I mean, like, if you even think about just the philosophical angle here, all of these things, all of these assets are just straight up belief systems, right? If I believe the US dollar is worth something, like somebody convinces me to believe it, whether it's the US military or whether it's the government or whether it's just the country, right? I believe it's worth something. And as long as a significant percentage of the world believes it, that thing is valuable. It's the same idea with Bitcoin. Because Bitcoin had the first mover, and because Bitcoin is the most liquid across all cryptos, there still exists belief, right? People believe that they can buy Bitcoin, easily convert it, and convert it to other assets. But as these new technologies emerge and they build their own followers, and as they build their own belief, I expect Bitcoin's sort of dominance to be erode. I'm sure I'm not unique in this belief. And there's obviously a group of people who absolutely think Bitcoin will forever be dominant. We'll see. But again, in the end, it's all belief systems. Like you said, if I believe Avalanche to be useful, if I believe Avalanche to has utility that solves some of the problems in my life, remove Avalanche and insert whatever crypto you want. As long as that belief exists, these assets will stay around and these assets will be valuable. In the end, I think humanity is going to evolve to the point where they're going to give up the energy arguments, etc., and everybody's going to move towards utility rather than, I'm moving stuck energy from one place to the other. Like, whichever crypto, and I'm not saying Avalanche is this one, whichever crypto allows me to send money to my mom fastest, whichever one allows me to pay for the coffee I buy, whichever one allows me to do efficient trading is going to win out. That's kind of my belief.
Yeah, I think you're in good company
on
this podcast. I guess we're all on the same page here. Do you, a little bit of a tangent, which we've already started going down. Do you have any personal views on Ethereum moving to 2.0?
Yeah, absolutely. I am quite excited about it. I mean, before I cared about Avalanche, I cared about Ethereum, and I still care about it, right? Ethereum, as like I said, brought the second biggest innovation in finance that I've sort of looked at. And I'm quite excited about the people behind Ethereum continuing to improve, continuing to bring this change. The important thing is them moving to 2.0, bringing proof of stake, them bringing, the idea of burning some of these fees, etc. Awesome, right? Those are validation of the ideas that Avalanche also implemented, some of which, by the way, I'm sure they took from Ethereum anyways, right? So I'm quite happy. I like Ethereum. It's obviously the one that's been adopted the most. And I personally believe right now, more so than Bitcoin, Ethereum should be the flag bearer of moving into the digital assets era, right? I get that a lot of, TradFi, or rather traditional corporations who operate Web2 type businesses, are accumulating cryptos as corporate assets. My view is Ethereum is as liquid as Bitcoin, and it has more utility than Bitcoin. I think, like, as soon as people sort of wrap their heads around, decentralization, they'll understand smart contracts, ability to trustlessly transact stuff. And, I think Ethereum is going to be the next big corporate balance sheet asset. So I'm quite bullish on Ethereum in general as well.
So you believe that they're going to be successful in moving to 2.0 with sharding, rollups, and the proof of
So the rollups piece, sharding, etc. It's a problem that needs to be solved, right? They have quite a lot of intellectual firepower that they're throwing at the problem. They have the capital. Yes, they're moving slower, right? But I mean, look, it's not a binary thing, right? You try something, if it fails, it's not like they're going to throw up their hands and say, we can't do it. I'm sure they'll iterate. And that's why they've been approaching this in a little bit more of a slow and calculated method, right? So yes, I think they will eventually succeed. The question that I have in my head is, hey, if we have subnets, if we have layer 0, layer 1 solutions that already give you the solutions to problems you're trying to solve, namely capacity, finality, capital efficiency, why do we need rollups? That's sort of the question I have, because rollups bring their own complexities into the system. And, if there's one thing that I truly believe, without giving you a political answer, it is the simpler, the better, right? If we can come up with a more simple solution, I like that better. That's why I find Avalanche to be a lot more compelling versus L2s. And that's why, I've been following and I've been operating in the Avalanche space more so than other spaces personally. I guess, hopefully that answers your question.
I'm okay with political. I think Avalanche is going to be there first, and it's just going to lead to Ethereum continuing to bleed off TVL to other chains. And plus, about the simplicity thing, I don't think that rollups are simple. I think they're actually very complicated, much more so than subnets are.
Yeah. So, like anytime you create something complex, testing and finding the edge case scenarios and the exploits become difficult, right? Yes, you have a lot of capital. Yes, you have a lot of brain power out there, but there is also a big amount of brain power out there trying to exploit these things, right? Every other day we have another few $100 million exploited, right? So, the more complexity you introduce, the more difficult for it is to first be extremely user-friendly. Like rollups, again, I have to do a deposit, like there's all sorts of memes out there. Oh, I have to wait a week to get my assets back. Like user experience can also suffer, right? I get the trying to solve the capacity, finality, etc. But I don't know. It's something that we're gonna look to see, and I don't see any harm in people trying different approaches to solve the same problem. I personally just like the L1 consensus innovation combined with like the subnets over rollups. That doesn't mean I haven't used rollups, because sometimes you have no choice. Some DeFi primitive you want to use is actually on, I don't know, like Arbitrum or Starkware, whatever. But my view is, again, if you look at the growth of Avalanche, there is a reason as to why it's exploding in TVL and transactions and usability, right? So that's sort of how I look at it.
So I'd love to move the conversation to Dexalot versus AMMs in general.
Absolutely, sure.
You've already explained how a CLOB works. Maybe if you could possibly contrast an AMM and a CLOB, I think that would be interesting.
Yeah, absolutely. So, okay, let's go back to the point that we made, right? CLOBs didn't work that well on Ethereum. Why? First, you have to build an order book, right? Like people have to enter orders, they have to choose prices. Second, to build an order book, people have to pay a lot of fees. Third, sending orders, whether it's trading or whether it's posting on the order book to advertise your interest, was very slow and cumbersome, and user experience was really bad, right? Now, my view is this is a protocol level problem. Protocol can't support high throughput, operations. And clever folks at, Uniswap basically said, all right, user experience on this thing sucks, fees are expensive. Can we do a solution to asset swaps in another way? So they really created Uniswap, AMMs, I should say, because Uniswap obviously created the AMM sort of sector, let's call it, as a workaround to the shortcomings of Ethereum not being able to support CLOBs. All right, that's my genuine belief. And the way they did it is, what's a central limit order book exchange? It's basically an order book where two assets exchange hands against each other. So they said, instead of an order book, why don't we bootstrap liquidity from the public, put all of these assets into a single pool, and allow people to do a single operation swap, which basically comes from the ratio of the two assets in the pool, right? They use a basic simple formula, y times x equals k, where k is constant. Now, big innovation. Again, it's a very clever solution to something that the protocol at the time couldn't provide to you. And that's why they've become popular. Additionally, they were able to innovate on the user experience side, because now there's no deposit functionality. Now you can just have a one-click trade with some trade-offs. The trade-offs being, one, you have to bootstrap a lot of liquidity from people. so that your pool is large enough so that when people do trades, they get sensible prices. Second, they lost the ability to allow people to choose what price they trade at, right? Because AMMs are a constant product formula, depending on how much assets are in the pool, the price you get changes. Of course, also, AMMs, because they can't allow you to enter limit orders, are a little bit more prone to being front run, especially if you want to do a large trade. And additionally, because it's a constant product formula, and there isn't a lot of liquidity there isn't a lot of TVL in the pool you're trying to trade, the larger your size, the worse the price you're going to get, and it grows quite exponentially, right? So I can summarize, but I'll let you ask a question first.
Yeah, I was just wondering, is there anything at all like this in traditional finance?
Oof, tough question. I can't claim to be an expert in all of TradFi, but every asset that I've traded or I've been part of, building automation around, has been central limit order book and institutional market making driven. So I don't want to generalize, and because I don't know what I don't know, but I've never seen it. I think this is an innovation that actually happened in crypto, but hopefully, maybe somebody in the audience can put a comment and say, no, that's not true, but we'll see.
And are there advantages?
Yeah, I think this model has actually never existed before.
Right. Yeah, no, that was my thinking, but I wanted to confirm. I've never seen anything like it. And when I came to crypto, at first I was like, what is this? What the liquidity tools? And it's just a new framework completely. Are there any parts of the AMM that you think have sort of a succinct or strong advantage over a CLOB moving forward in crypto?
Tricky question. So I think CLOBs are the superior way to trade, okay? Because, let me talk about advantages of CLOBs. You don't need TVL. You need credible institutions that are willing to price assets, and boom, anybody can trade on a CLOB as long as there is a market maker there, right? You don't need the community to bootstrap. Second, while AMMs are good for community making some of the fees, they are really bad for retail users who don't know what impermanent loss is, right? So in that sense, from a trading perspective, I think CLOBs are superior as long as you can have institutional market makers willing to provide that order book. However, on the AMM side, of course, it's not just about the swaps, right? AMMs basically created a brand new economical model where to bootstrap this TVL they needed, they created incentive programs, namely the yield farms, right? That sort of took a life of its own, and yield farming is a distinct advantage for now, I'm going to emphasize for now, versus CLOBs. Obviously, there is going to be innovation on the CLOB side in the next months or years, let's say. And I think this advantage may be reduced. But the biggest advantage, like I said, is ease of use, UX, and then ability to yield farm, right? The farms basically can be incentivized by the projects themselves or the platform operating the AMM. And that actually creates awareness that allows people to learn about the AMM, about the projects that are listing on the AMMs. And I find that to be a big advantage. I'm not saying it's necessarily an insurmountable advantage over CLOBs, but as CLOBs are finally coming to blockchains, I think in this department, it's a little bit behind.
So, in this idea of DeFi, of building the money Lego, where different protocols are able to build on top of other protocols and seamlessly access each other's services, does the AMM in that setting have an advantage because it's so automated over a CLOB?
No, because CLOBs can allow single operation trades as well. So, just because Dexalot doesn't have it today doesn't mean it's not in the code and it can't be enabled. So market orders, let's take market orders, right? Market orders are effectively the same thing as swaps on an AMM. So if an AMM is integrating itself to a game project to be an in-game marketplace for exchanging two game assets, a central limit order book can achieve the same thing through market orders, right? If anything, my view is AMMs provide less functionality for embedding into more sophisticated DeFi primitives, because they don't have limit orders. They can't have stop loss orders. They can't have take profit orders. They can't have gamma ladders, right? Like there's a lot of products built around central limit order books and TradFi that institutional investors, traders, etc. have been using for years. And those things are not really possible with AMMs. I'm not saying ever, but AMMs need to evolve quite a lot. And people have been more focused on TVL and yield farming rather than innovating tools for trading. So in that sense, I actually think AMMs are not at an advantage. Right now, the advantage they have is there's a lot of AMMs, everybody understands them, but now with the advent of Avalanche, CLOBs are now going to be sort of built up and people are, coming back to the, well-known, more capital efficient way of trading. That's kind of my opinion.
So do you think you could actually work Dexalot into, for example, some of these different like GameFi
Absolutely.
things, like different ecosystems?
I'll give you a better
entirely?
example. I'll give you a better example. So let's talk about an algorithmic loan protocol platform, right? If I'm a person that locks up my collateral, let's say I have Bitcoin, I lock up my collateral. I believe that Avalanche, obviously this person is a rare breed, but let's say I'm a Bitcoin holder, but I believe Avalanche is gonna take off, right? I can lock up my Bitcoin into an algorithmic loan protocol and I can pull out AVAX. But if I want to leverage against my Bitcoin, basically the algorithmic loan protocol platform can actually directly integrate Dexalot and actually execute market orders as it's levering and putting the collateral back into their platform. It's no different than doing it with an AMM. You send a market order to Dexalot, which hopefully should have better spreads, better depth than an AMM. Because remember, if you send large orders to an AMM, the ratio of the assets in the pool is going to shift and it's going to grow sort of exponentially. Versus in a CLOB, the market maker is going to replenish the liquidity as its positions are taken out, right? So similarly to a game, right? Games actually would benefit from CLOBs better because let's say I spent 50 hours playing, a RPG game. I got a legendary sword. I don't have a use for the sword because I'm a mage. So I'm going to sell the sword, right? The market for the sword could be 20, but I spent so much effort in it. I think the sword is so rare that it's going to increase in price. I may want to just place my sell order at 30. You can't really do that with an AMM. You can only do that with a CLOB, right? So I think both of these primitives, to be honest with you, have a place. And it's going to depend on the use case that the projects want to do. But, I don't see why they can't integrate both. I'm back biased because I've been trading CLOBs most of my life. I think capital efficiency is more important than anything else, even user experience, because user experience can be improved, but improving capital efficiency is difficult. So I think, CLOBs are, the growth prospect in trading going forward.
It's actually really interesting. That was actually something I was going to ask about, is that as it stands currently, if there's a protocol that wants to use liquidity, like let's say, you're opening up a leveraged position in one of these, like, Alpha Hamura, for example, and you need to make a trade from like the protocol level. As it stands now, if you use an AMM, it's just the liquidity is right there for you to use instantly, and then your position is created. Are you saying that like CLOBs are actually going to be more favorable than protocols using
absolutely.
an AMM?
I mean, like right now, we're just building Dexalot, right? We have one institutional market maker, and there is more on the way. But why don't you think about TradFi, right? In TradFi, in FX, you could trade $1 billion against euros, and you wouldn't want to do that size of an order on a AMM, but you could do that on a central limit order book approach, right? Why? Because as people provide liquidity and as you trade it, yes, you have impact, but that impact, that movement in price doesn't end up being 50%. It ends up being a few percentage points because there are market makers who are willing to take positions as these trades are occurring. In the AMM, everything is automated and it's a function of how much liquidity is in there. So for you to be able to do a $1 billion trade, you need like hundreds, maybe trillions dollars worth in the pool. Very difficult to bootstrap that kind of liquidity. If I'm a market maker, I'm making money off of spread. I'm not making money off of locking it into an AMM pool and waiting for the AMM pool to generate me enough fees. Because as a market maker, I can choose not to take that impermanent loss risk by widening my prices, holding onto my assets, or trading my assets faster, right? So market makers having the ability to more granularly manage their risk, manage their orders that they're placing in the market, are able to provide better spreads, deeper liquidity versus something like an AMM. Again, I'm not saying this exists now in crypto. Dexalot is first of its kind. We have a lot of work to do to work with the market makers, as well as to move to the subnet so that we can provide a more favorable environment for these guys to provide tighter prices. But it's coming, right? This has been proven. In my opinion, this is a solved problem from TradFi. Again, TradFi gets a lot of things wrong, but they also get a lot of things right, which crypto people often kind of neglect. And capital efficient, limit order book based trading, in my opinion, is actually a winner, not a loser.
So do you think possibly, I mean, it sounds like, talking about user experience, maybe we agree that AMMs are probably going to be slightly superior in terms of that factor, whereas the CLOBs are going to be more capital efficient. So would that suggest that the large trades, whether from protocols or from large investors, are going to probably go through CLOBs, whereas all the smaller trades from entry-level users are going to go through AMMs? Is that how you would see things playing out?
So at this very moment, yes. But remember, user experience is, separated from the actual capital efficiency and the mechanism of trading. I'll give you an example. Binance is the most popular and the largest by volume exchange in crypto. Ignore DeFi for a second, right? Where and how is the highest volume being traded? It's on Binance. It's a central limit order book exchange. Actually, a better example is Coinbase, right? Coinbase has Coinbase Pro, and then they have Coinbase.com. Coinbase.com is basically the same interface as an AMM, where you go to the simple interface, you press a single button, and it gives you the price that it wants to give you. You don't really have control over where you trade, but it's no different than an AMM, except you can bet under the covers it's being traded as a CLOB. To answer your question, in the context of DeFi, yes, today I think the less sophisticated user, or the user that cares less, trades on an AMM because their size is smaller. The slippage difference between a CLOB and an AMM isn't that much for that size. But if you're a sophisticated hedge fund that's using an algo to disperse your risk, let's say, I don't know, you have, $10 million worth of AVAX you need to buy. Absolutely. They're using an algo to go to multiple exchanges, tap into multiple liquidity sources, and they are buying in pieces across CLOBs and AMMs altogether. Anytime CLOBs have better spreads and deeper liquidity, that's going to be the choice of trading, regardless of how the user experience works.
So I have a philosophical question. Thinking about crypto and the goals of decentralization, when you think of an AMM with the liquidity pools that are accessible to all investors and everyone is in there getting the same deal, depending, with different levels of capital, but per dollar, versus a CLOB where you have a traditional or centralized market maker making the trade. How do you sort of approach this dichotomy in the context of crypto?
Awesome. Fantastic question. I love it. Now, yes, institutional grade market makers have been a closed system as well. These are intelligent, highly capitalized people and teams coming together and creating market makers. That's how it is today. But that's not necessarily how it's going to be in the future. Yes, you as an individual coming into an AMM gives you the ability to play being the exchange, but the risk you're taking is impermanent loss, right? Let's say, you provide liquidity into Ethereum against AVAX pool. Like, depending on how quickly these two assets diverge, the fees that you get from the trading itself may not cover your losses, right? You have opportunity cost loss by not holding on to the assets together if both of these assets go up, but they go up in different percentages. Second thing I want to point out is there is the concept of decentralized market making, which can be bootstrapped by the community. Have you guys ever come across a project like that?
I haven't.
Okay. So there is a project called Bcred that actually is in the process of building in Avalanche. And one of the coolest ideas I've actually ever seen in a long time is they're going to bootstrap inventory from the community, from people like yourself and me. They're going to take that inventory and they're going to provide market making in the market. And as they make money, they're going to potentially, as long as, the legal angles, et cetera, work out, they can create value for their own token from the P&L that they generate as a market maker. By basically getting their utility token, you effectively may reap the benefits of a institutional grade market maker without incurring the impermanent loss through an AMM. So as CLOBs become more popular in the DeFi space, you can bet that market making models are also going to change. Like, nobody's truly immune to this decentralization concept, because think about it this way, no matter who you are, right? Raising the appropriate capital to market make every asset is difficult. And it's obviously clear that people are willing to play the role of the exchange because they're locking their TVL into these AMMs. If you could tap into that TVL in the context of a automated market maker, this is the TradFi term actually, it's basically a piece of software that market makes on a CLOB. Boom, like I think the TVL angle on the AMM shifts because when you bootstrap liquidity for a market maker, you're no longer subject to impermanent loss, while on the AMM side you are. So I really think a lot of these things will shift as the CLOBs become more popular, if and when they become popular.
I think it's actually kind of cool. It's it's kind of like thing you said about the market maker. It's like creating an LP, except it's an institutional market maker that's funded by the community.
Exactly, because think about it.
It's a really cool idea.
Yeah, absolutely. I love that team. Like they have strong, smart people as well. Like think about it this way: every market maker, let's say you're building a project, right? You have a token, and you arriving to the market will need a market maker no matter what. If you list yourself directly on an AMM, you're going to run into a lot of problems, right? You see the bots and how they front run people.
Yeah, I was actually going to ask you about that next.
Yeah, I can actually cover it very quickly if you guys want.
So just because the way that I see it now, a very large project may not have a very hard time to list on an AMM because it would be pretty easy for them to pick up some investors and get some collateral in their LP relatively quickly. But for small projects trying to list a new token, it seems like a really big struggle right now, because then you see all of these bots coming in and buying up hundreds of thousands of dollars worth of their token within the first 5 seconds of it listing, because they're able to just scan the blockchain to find the address and instantly buy it. And so then you have these huge, this gigantic volatility that I don't think is good for any token, price. And so I think the idea of a new project listing on a CLOB is definitely a very attractive model, because they don't need any liquidity to just start it up, as far as I'm aware.
Absolutely. Yeah, absolutely. So, you hit it on the nail, right? Like, think about it this way. AMMs, because they use the constant product formula under the covers, intrinsically also say, in simpler words, they also say, if you buy the asset that you're interested in before other people, you're going to get it cheaper. Because once you buy it, the price shifts, and the next guy who buys the same asset is going to buy it more expensively than you. That creates an advantage to people who are fast. And that, in turn, creates the incentives for bots and MEV operators to front run everybody by scanning the blockchain, looking at the mempool, running big nodes, to buy things as cheaply as possible, then watch people using their MetaMask buy it after them, and then turn around and dump it back, right? It's easy P&L, easy profit. You don't care about the project. You don't care about the community. You just made money, and you just, basically stole from the project. You basically hurt the community, and the community doesn't understand it because this is a very sophisticated situation. They turn around and they flood their project, right? This sucks. I absolutely hate this. In reality is crypto is by far the most adversarial environment for trading because first, there's no regulation. Second, there is very distinct technical advantages to people who understand how blockchains work, right? So we have to prevent this one way or the other. Like if we don't prevent it, large institutions that are supposed to lead the way of adoption of crypto is not going to happen. Everybody's going to look at these pumps and dumps where you list a brand new asset in the market, boom, it goes up 60% from IDO. Like 1 minute later, it comes back down 95% and, the project is wrecked, right? So that's why Dexalot sort of created Dexalot Discovery. The idea, again, was partially taking from TradFi. In TradFi, and you know what, ignore TradFi. You can buy things on eBay or in auction houses using an auction mechanism, right? If you have an asset that you think is valuable, but you don't exactly know the value of it, you may want the market to price it for you. So you put it on an auction, people bid, and whoever bids the highest defines the price for an asset, and boom, you now know the value of your asset. In traditional markets, as well as crypto markets, the way the markets actually work is you have buyers and sellers simultaneously participating in the continuous price discovery, right? New York Stock Exchange, when it opens up the market in the morning at 9:30 a.m. Eastern, they actually run an auction where buyers and sellers enter their interests. The exchange actually collect all the interest, create the average, and open the market at the average price between buyers and sellers. So we took that concept from TradFi, we made it transparent. TradFi auctions are not actually visible. We made it transparent because we have a central limit order book that's on chain. And, we created this auction mechanism, which now allows projects to list themselves in a way where both buyers and sellers can participate and identify price discovery in a healthy manner. It's been very successful so far. We've done two listings. First one was ours. Second one was Lost Worlds. And we have 8 more projects in the pipeline that are actually coming. To your second point, yes, certain aspects of going this route is easier than listing on an AMM because you no longer have to worry about bots, right? The alternative thing that you have to consider, however, is a market maker, right? We are working with partner market makers who we introduce projects to, and these market makers need inventory to be able to market make your asset. Just like you locking your inventory in an AMM, there needs to be an agreement between the market maker and the project to provide them the inventory so that they can provide buy orders as well as sell orders. That's the main difference. But yes, my view is if you identify your price fairly in the market without blocking sellers or without blocking buyers, you're going to arrive at a healthier price. It's not going to look like a pump and dump. And then you're going to avoid a lot of FUD that may hurt your project, and it will give you the best chance to continuously build your product, right? So, that's the reason why we built Dexalot Discovery, because we knew this was a huge gap in crypto.
So today, if I'm a brand new project, and I'm listing, I have to find people to be part of the liquidity pool. And to do that, I have to, first of all, supply my half of the liquidity pool because no one has my token. And then I have to reward people for supplying the other half or just making it up.
Actually, you as a project have to supply all of it. Like, let's say you have, JF token and then you have AVAX. You have to put the AVAX and the JF token at the same time into the pool. So you're supplying twice the capital into the pool to make that happen. Yes, people will add eventually, but until you add it, nobody's going to come in and supply liquidity at the size that you, the project, can supply.
Yeah, I was thinking I could maybe bribe someone to add the other side and sort of have a deal with them. But either way, I'm having to emit a lot of my token, right? So it's very expensive. One way, however you look at it. Is that going to be different on the CLOB, and how so?
Yes, very different. So every market maker has a different model, right? But the model that's the most successful is the one that aligns the interests of the project with the market maker, right? Generally, the model there is basically you give inventory to the market maker and you have terms to get your inventory back at some future date, at some future price, right? And by basically making this a proper TradFi-like agreement, properly legally bound, you end up aligning your interests with this institutional market maker because now they have an obligation to look after the inventory properly because eventually they're going to have to pay it back to you, right? So when you do that with an AMM, there is no alignment of incentives. If anything, it creates the environment where people who didn't care about your project but generally wanted to ride the hype turn around and sell the tokens directly into your pool, and you end up sort of footing the entire impermanent loss bill. In the case of the market maker, they have mechanisms to, manage market pressures, right?
So in a way, is the listing price for the project essentially going to be zero?
Listing price for the project is completely different. For the listing price to be discovered, you don't need a market maker. You just want investors who have the token, and you want the community who want to buy the token to come in and enter their orders.
I'm sorry, I didn't word that correctly. I meant the cost to the project to get well, there's no pool, but to get the trading to start essentially is zero because they have to lend some.
Let's break it down. Let's break it down to try and, I'll try to make it simpler.
They would have to supply their tokens to the market maker, correct?
Yes. So, okay, let's talk about Dexalot as the, concrete example here. Listing fees? No, there is no listing fee like central limit order book, non-decentralized exchanges. Like, we don't charge anything because our goal is to make projects successful, and Dexalot is going to make money from the volume, not the listing piece, right? So number one, no cost there. You have to give the tokens to the market maker in some shape or form, whether it's a loan or whether it's a grant, depends on the deal, right? And the market maker will have to make money in two ways. One, if you align interest correctly, if your token succeeds and over time it appreciates in value, in an ideal world, you pay the market maker with some of those tokens that you gave to them so that they're interested in supporting your project properly. And number two, market makers make money from charging spread, right? The difference between the bid and offer is how market makers make money. So let's make this simple for the audience as well. If I'm looking to buy something at 99 and somebody hits my bid and I just bought the asset at 99, if I'm able to sell it at 101, I just made $2 profit, right? If 100 is the mid, 101 is my offer. And, I bought at 99, my unrealized P&L, as long as I say, the market is at 102 or 101, it's $2, right? So market makers basically, in an ideal world, they want to capture spread. And that's the second way they make money. Of course, the deal between the project and the market maker needs to be such that if the token appreciates tremendously because your project is successful, market maker has to have upside there as well. But from a cost perspective, it's very different than locking your capital into AMM and sustaining the entire loss derived from people who are just flipping your token. You have another expert in trading who is sort of becoming your partner and aligning your incentives. So my expectation is the cost of working with the market makers should be a lot less. Obviously, this remains to be seen, and the market making sort of incentive alignment models between projects are evolving, but that's kind of what we've been seeing so far.
Great. I know you have to go in a few minutes. Jared, do you have any closing thoughts or questions?
Yeah, I just wanted to ask what you think about the kind of future of the CLOB, Dexalot, and let's say Trader Joe, for example, because you're going to end up, let's say we assume that Dexalot is going to be a very high volume exchange, and currently Trader Joe on Avalanche is the most high volume place to trade. Do you think that there could be some new methods for them to either maybe work together, or do you think there's going to be some
absolutely. So
maybe some arbitraging happening, or who knows?
Yeah. So Avalanche, if anything, is the community where people do support each other. Yes, there is the competitive aspects, but in our case, we would be happy to sort of work out something that's mutually beneficial. It's kind of like we're so early in this technology and in this space that like we don't have to try and kill each other. We can support each other. Reality is Trader Joe is the sort of big dog right now in the house, right?
Yeah.
They have the volume. Their model is quite a bit different than ours, though, right? We are trying to position ourselves as the sort of team that actually has this exact experience, right? Has the, I don't know, multiple decades of trading, finance, exchanges, etc. We actually are pro regulation. I'm not going to say, we want regulation to come now and be stringent. What I'm saying is we actually are aligning ourselves with the existing laws, existing understanding of regulations, and we're trying to apply them to run a clean operation. When you compare us to Trader Joe, in that sense, it's very different. They're completely anonymous. They're completely open. Anybody can list whatever assets, and it's a little bit of a different approach. So in that sense, I don't know if we're exactly comparable. To your second point, AMMs are the most popular place. Trader Joe is by far the highest volume, highest TVL that exists in the trading space in Avalanche. And we did have an initial conversation with them as when we were listing our asset. But at the time, they told us, they don't have bandwidth to sort of, work with us to list our assets in a, like they have double reward farms, etc. And, we haven't connected with them again because, that was the context at the time. We absolutely would work with them, again, as long as there is some mechanism where we could collaborate. I actually have been a big Joe user, and, I'm not shy to say it, I have Joe, okay? Like, I've held Joe for a long time. So I do like what they've done, right? They've taken and improved on stuff, and, that's fine. So that's kind of how I view it. This question should be asked to the rest of my team as well. But that's kind of how I look at it. If there is a way for us to work together, of course, Trader Joe is a brand. We wouldn't mind working with them. If anything, we would welcome it.
FireStorm, thank you so much for everything.
Thanks
It's
for having me.
fascinating space. Can't wait to see what's next.
Yeah, let's do it again, man. Let's do it again sometime soon.
Awesome.
Yeah, for sure.
Thank you.
See you guys.